What up, traders? What up, investors? Ken here from Dyslexic Investor, and we are looking at something we have not seen since basically September, October of 2008. The QQQ has not done this since 2008 of September and October. So that's a long time ago. That is a extremely long time ago. And what are we looking at here? We are currently looking at the NASDAQ or NASDAQ ETF, or known as the Qs. So what we're going to be looking at, the price that we're seeing here. You can see here we're closing on Friday below the orange line, which is below the 34 EMA. We've touched and broken through the 34 EMA here. We have touched it here. This is again due to the pandemic. We actually never got to that extremes with the moving averages. At the same time, we did have a lot more selling there with a little bit more higher volumes, but we're having consistently higher volumes coming through, and not kind of those middle fingers that we always kind of talk about, of those like a really quick directions, because we had the Fed jump in there, and more kind of to come about the overvalued potential market that we're seeing here. I'm zooming in here. We both see this as well, touching the 34, even coming down to the 55 exponential moving average, which is the white dotted lines, which I'm potentially looking for that level to potentially be hit here without kind of jumping too far ahead. Then looking at, again, that 2008-ish time frame where we actually broke past it and continued to close it. You also see at the same time that the moving averages were much more condensed together. As you can see here, they are very much already kind of like, the markets were like kind of up to something. They weren't as frothy, air quotes, that we are seeing with a lot of the market that we've seen over since the bottom that we had from the pandemic, and that really strong rebound here coming into that play here. So again, looking for potential, the QQQs at that level, breaking below that 34 EMA and closing below that we have not seen that. So we're kind of coming to uncharted territories for a lot of people that haven't been investing for that long. Look, I was investing back then, but I knew nothing about charting like I do now. So this is also new territory for me, to be quite honest with you, looking at these very drastic moves that we're seeing over the past couple months here. Again, we're looking at a monthly chart, again, at the max range of the QQQ. So we're going all the way back to basically the dot-com bubble here. So speaking more about the dot-com bubble, we want to be looking at some numbers here. This is something that I always look at. It's not the go-to wonderful indicator, but it's called the Buffett indicator. If you don't know who Warren Buffett is, please go stop and pause this video and go check out who Warren Buffett is and educate yourself. So this is the Buffett indicator, where at the close on every Friday, they kind of update this potential indicator. As you can see here, they're currently listing it as overvalued still. We are currently 29% from historical deviation levels, and we're considered overvalued market. But we have come off from historical high as the indicator, so be mindful about that. Here's just a quick little orange chart here that we saw. We're well over 200% plus higher here. But again, you see that historical kind of trend here kind of helping us kind of move along here. We are still kind of way, again, that 29% away from that. That doesn't mean a more 29% crash in the market. It just means like the way they calculate this between aggregate U.S. market value and the GDP growth. And again, coming into the R word, aka recession, or the D word, depression, which we have a slowing GDP as a country in the United States. Some other interesting charts that I like to point out is figure 4 here. This is where they're talking about that previous high here. They saw that previous high, and again here, this was the 2000 level, which everyone's like, oh, this is kind of like the dot-com bubble, which things got very overvalued. Yes, things got crazy overvalued here, coming to these very high levels here, being highly. You had those SPACs. That was just the beginning of the juicing, when you had Nikola Tesla SPAC coming out, where they really don't have a product market fit. They don't even really have much of a working product at that point, and they were selling it like in that. I mean, if you remember that stock, that thing has went up like gangbusters. We can look at that. That's NKLA. Look at this. I have two circles there. It looks like some female parts. Again, going from that SPAC, jumping all the way up. insane in the membrane. Like, this is unheard of kind of territory. So going back here to that indicator about that .com bubble, everyone heard that story of pets.com where it was worth more than it was actually trading at. I'm sorry, it was the name was worth more than actually the company of the stock, which is insane. So looking at here, are we to potentially kind of coming to the bottom here? Honestly, I would say no, not yet. There still needs to be some more clearing out here, especially if we come into what we saw just this week with the inflation numbers for May. We saw the inflation numbers for May still at 8.6. Really big driver with that is still food costs, and of course the cost of gasoline has gone up as well. It's not really coming down for the consumer price, because again, what is a huge driver for a lot of people, especially in the summertime, is vacation, traveling, and that kind of stuff. If that bottlenecking people and it's shrinking their budgets to be able to go traveling, to go to the Disney World, just to go to the beach, or all these kind of circumstances, it's going to have people tighten their belts. And guess what? The United States economy is a very, very focused consumer spend and consumer-centric economy, where more money we spend, the better the economy does. It's a lot of services, and for the consumer, it is a huge part of the overall economy that we know and love here in the United States. At that point, when people start tightening their belts and not spending that much, that's going to contract a lot of things. And we really saw that just this past week. If I look at here at all U.S. equities sectors, so of course this is everything from the S&P 500 group. So this goes from energy, utilities, healthcare, real estate, consumer discretion, technology, financials, everything, or banking, all this kind of stuff. You can clearly see the outlier is the XLE, which is of course the energy sector, but everything else is still not that great. Of course, XLC and XLK and XLF and XLY are going to be down the most. That's the consumer construction, the technology, the financials, and the communications, which is your Googles, Facebooks, and stuff like that, have been down drastically due to what? Tightening of the consumer spend, fear of recession, fear of that D word, depression, kind of coming through. So looking here at this chart, going back to QQQ, we are at an interesting level here. Again, for the first time since 2008, we have not seen it close below the 34 EMA. As against highlighting again, because some people don't always listen, that we have touched that 34 EMA, but we have bounced back quite drastically. We have not seen it close like this before. That is a no territory. The other thing that we want to start looking for, zooming into a weekly chart going back just 5 years, we have closed below the 144 EMA, which is the green dotted line here, a couple times before. But at the same note, we have bounced back really fast, right? Like, do you remember what happened in this time frame here in 2018? This is when our boy Jerome Powell was like, hey, we need to start raising interest rates and things like that at the Jackson Hole conference, and the market just went completely, they went pissy mood. The bears came out, they punched all the bulls in the face. Was not a fun time, and of course it bottomed literally on Christmas Eve. The markets were actually made somewhat of a rebound here, and you can see that really nice momentum kind of coming through here. Of course, then we had a little bit of chop, a nice little more bump. Then of course we know all what happened during the pandemic, aka the virus. Very basically technically textbook V bottom here, kind of coming through here. This is something. We're not getting a V bottom here, right? Like, this is a downward dribble, more of a downward slope here over the past coming weeks here. And now we're kind of hitting that chop range, which the market's kind of teeter-tottering. If it gets any more bad news, we can easily continue to roll over here, and looking for some potentially even lower prices here, potentially coming into QQQs around 270 to 260 range. If we do see that heavy selling coming through, If we get another bad inflation numbers, a bad jobs report coming out, these are all factors that could really drive the prices lower, and continuously make the market in a downward spiral, in the sense of this chop mode going into a very bearish stance, and really potentially coming back and losing any more gains that we have seen. Zooming into more of a daily chart here, it tells a pretty telling story here on the trend here, still going lower here. I have a great chart here that someone shared with me a long time ago. On the daily chart, it looks like on Thursday we're trying to rebound, but that inflation number just smacked us across the face. People were kind of, I don't want to say high on the hog, maybe just trying to feed and kind of feel the bottom, because the one thing you have to remember, no one ever knows when the bottom happens. The bottom happens and then you find out eventually. Like it's not like, oh, these 10 things happen and then a cloud appears in front of my house and says, Ken, time to buy now. Put everything in. Get another mortgage. Just buy everything. It doesn't happen. I hate to say that, but again, everyone on CNBC, all these folks are saying that there's a bottom in place. No one can tell the future. That's why this game, aka the stock market, makes it so interesting, because no one really knows what's going to happen, right? That there's models, there's statistical analysis, all this kind of stuff, but you have to understand the potential psychology of how people play the market. And there is no bottom until there's a bottom, if that makes any sense. At the same chart, I want to scale this out even to like that max monthly chart here, and this really kind of tells a better picture here. We've been red for about 3 months now, and we haven't seen that for some time. That goes back to what? That September of 2008. This is the first time we've seen it red for this long period of time. This is potentially a catalyst if we do see the market shrink even further down. Again, we talked about NASDAQ around 260. That's the level that we're potentially looking at for some kind of level of support coming in there. If that really breaks, that could be looking at some further price targets, looking at 225, even 200, depending on how bad that selling kind of comes through. Because once that snow kind of falls down the mountain, aka the bears on top of the hill pushing these snowballs down, on seeing which one could create that avalanche or that fear that allows the larger bulls or potential longer term investors to kind of sell out or in fear, driving that VIX substantially higher. This is something that to be somewhat concerned about and looking for that. So my advice, and again, I'm not a financial advisor, this is just what I would be doing. Cash is king right now, even though inflation is smacking you across the face. If you're an options trader, you're trading options, you're just creating volatility, selling calls and puts just to kind of create the collecting the premiums from those. But on that note, I hope this wasn't too scary in like a fear-all kind of video. I just want to put that out there, educate the folks, and the kind of scenarios that we potentially could be running into. Again, thank you guys for watching from the bottom of my heart. Catch you guys on the flip side. Peace.